Thank you so very much, Hubert. I really appreciate that warm introduction. It's great to see all of you this morning. Let's go ahead and let's get the screens up here and get right into it. This is going to be a little bit different. While some of the content I'm going to share with you this morning is going to be something hopefully you've seen before and can build upon your knowledge previously, because I really want you guys to understand this is actually something I did the trading competition a couple weeks ago or last week in Las Vegas. I used this strategy there as well, and it's one that I use a lot, so I really like to share it with people because I keep doing these in trading competitions. I do them in my trading room, and we're just going to be doing something a little bit special, which I'm going to share with you in just a few minutes. So let's get through a couple of housekeeping items. But yes, thank you so very much. It's very nice of you. Good morning, good afternoon, and good evening to you around the world. I see we got people all over the world, and that's wonderful. So we've got a large group, but let's go through a couple things first. First of all, just a reminder, trading involves risk, not just reward. We're going to talk about some great things that have happened here, trading competitions, live trades, using the strategy, etc. But trading involves risk, not just reward. Everybody focuses on the reward and how much money you're going to make in the markets, but we don't focus on risk enough. And so I'd like to go and keep it real for people and remind people before you put a trading plan together and talk to your broker about it or a registered financial representative before we're doing a trade. And that goes for anything you hear all day long. Now, I've got also a reminder, any trades that I show you today are going to be live trades that I took, but I have a whole section labeled live trades. But if you guys ask me a theoretical or a hypothetical on how I might go ahead and do a trade under a certain circumstance, a week from now, that's going to be a hypothetical. And so just remember, hypotheticals is way different. Back testing hypotheticals, all that stuff, it's all way different than the real world of trading. So that's why I like to keep it in the real world and do the trading competitions. And like my friend Hubert and like my friend Todd, do live trading on the screen in front of people just so that we can go ahead and keep it real. Okay. Also, options. There's a lot going on out there about options these days, and a lot of people say you can't lose any money trading options, but I've seen the marketing pieces from some of the people coming out, but the reality is you can. There's a great website if you guys want to learn more of in an unbiased fashion about some of the risks regarding options. I'd like to share that with my options trading students as well. Okay, so with that being said, I can see we got a really large group here. I don't know if throughout the day this event might lock up here. So the reality is what we're going to do, we'll hold off to the last several minutes for questions here. And I try to put in a little extra time there to be able to answer questions for you. But we have a really large group registered and attending here this morning, and it's great to see so many of you all over the world considering the holiday today. And so what we're going to do is I'm going to do a brain dump of important information, take lots of notes, as Hubert went ahead and said, and we'll keep the flow kind of going uninterrupted, and then what we'll do is we'll come back on the back end and see what questions may have been left open there. But with that being said, after all the housekeeping notes there, I really appreciate you guys being here. This is a special event. We just culminated last week in Las Vegas, my final trading competition of the year, and that brings to a total of 8 trading competitions that I was able to win this year. Live money trading competitions around the world. 2 of them in Las Vegas, 1 in Dallas, Toronto, San Francisco, Italy, and again, the one in May in Las Vegas there, New York, and Orlando. So a total of 8. I'm done, and in fact, I've made some announcements that next year I'll be doing things different. I'm not going to be doing the money show, so I hope you guys got to see me trade live in front of one of these special events this year or one of my past years. I'm going to be focusing more on some of the international competitions and so on and so forth. So, but what I am going to do today is show you some of the same techniques, including this last competition in Las Vegas that I used to win it. So that's going to be great. So with that being said, there's not a better time than right now to be here, and also right after me, I got my good friend Todd that's going to be here as well. So wonderful stuff. So as we kick off today, who's this going to be for? Just to make sure you're in the right place. Now, later in the day, there's going to be speakers in different areas. But for my presentation, if you trade stocks, options, futures, or forex, and you're focused on day or swing trading, then you're in the right place. Okay. If you're a long-term investor only, then you might want to perhaps look to see one of the long-term investing people later in the session or so. Okay. Also, one other thing, I'm going to be doing something a little bit crazy today. It's my time is very valuable. Your time is valuable, but it is Happy Thanksgiving weekend. As you guys know, I get mushy around the holidays. I'm not going to be offering anything for you to purchase today. There's just not a thing that you can purchase from me this morning. But what I am going to do is offer you guys the ability. Next week, I've got a live trading event. I was just asked to do a special live trading event next week, and so I'm going to invite anybody who goes to becomeabettertrader.com/live, I'm going to invite you guys to that. Okay, so just go to becomeabettertrader.com/live. It'll take you to this little page, and then just click here to get access and just put your first name and email address in. So I will invite you to the special live event. So the strategies you hear me talk about today, then perhaps you get to watch me trade live on the screen in front of you next week, just like I did in the trading competition last week. So there is my offer. So it's free to come to becomeabettertrader.com/live. But I'm not going to have anything to offer you to buy today. Okay, I hope that's fair. Some people I know love to come to things and buy, and today's everybody else in the world, I've gotten inundated with emails. Everybody's going to sell you something, but not me. So let's have some fun together. With that being said, this is my website, becomeabettertrader.com. If you go to this, you'll know you're in the right place. And then also, if those of you that don't know me, I was recently featured in some videos for the Chicago Mercantile Exchange, so perhaps depending which broker you trade with, you might have gotten to see some of these videos that I recently filmed. And also this year I was featured in the Modern Trader magazine, so if you guys get Modern Trader magazine, go back into your issues earlier this year and take a look and find the write-ups on me about there, kind of explain some of my strategies, setups, different things like that. Also, I was featured in an Italian magazine earlier this year after winning the big international trading competition earlier this year in Italy, so that was awesome. And then if you guys look at the international magazine, it's featured in 5 different languages called Traders Magazine. I had a write-up in there about one of my other core strategies, not one that we're going to feature today, but one that ties in very well with the strategy I am going to share with you today. And I'll be doing some updated strategies in there for them actually later in the year. They've already asked me to, or into beginning next year, they've asked me to do, because the last one was so successful. So here, if you get Stocks and Commodities magazine, there's a 4-page write-up, and this was a good one because this talked about psychology and risk management. So if you guys, this was from like August, I believe it was, of this year, and so if you guys get Stocks and Commodities magazine, pull that article open. Hopefully you already saw it anyways, if you get Stocks and Commodities magazine, but if you don't, by all means, get your nose in that. You can, I think you guys can order past episodes, and you might want to do that because it's a 4-page article there. But in the end, what I like to remind people is I'm just like you. When I started in this business, first of all, I put my socks and undies on, my pants on, just like all of you do. And these were the books I checked out in the library when I was a teenager. How to Read the Wall Street Journal. No matter how many times I tell people this story, and it's been countless times around the world, I still laugh every time I see this. How to Read the Wall Street Journal. How naive I was back when I was a kid, trying to figure out how to trade, right? How to look at the stock market, because I was really interested in charts. I was just kind of weird like that. I liked chess. I liked thinking several steps ahead, and Wall Street felt like was a challenge just like that. To not think about what's right in front of you, but think about what's going to happen, steps ahead. And that's why I think, enjoying chess was much like the stock market. So, with that being said, I just want you to understand we all came from the same place. I know what it's like to be really busy. A lot of people say, gee, Rob, I don't know if I have enough time to learn the stock market. I have a full-time job. I want to learn this, but I have a full-time job. I just don't know what to do. Gang, I had 2 full-time jobs, a part-time job, and I had my son at home. Okay, so I had 2 full-time jobs, a part-time job, and a son at home. Gang, I know what it's like to be busy, and fortunately, that son of mine became a really productive member of our society, and I'm really excited he officially gets out of the Marine Corps here in about 4 months or so, 4 or 5 months, and can't wait to go ahead and have him home and be part of what we're doing here. So, with that being said, I know what it's like, and by the way, I'm still busy. I travel all over the country, all over the world. Of course, I was in Las Vegas last week for the trading competition and my multiple speeches and that. This is my 2-year-old daughter, Mackenzie, my lovely daughter, Mackenzie, my beautiful, lovely wife, and couldn't ask for a better wife anywhere in the world, Sarah, and our 6-week-old son, Logan. So gang, here I am now. About to have a birthday in a couple of days. I have a 6-week-old son. I know what it's like to be busy even now. And you can see the receding hairline. I know what it's like to keep busy. So with that being said, these strategies that I want to share with you today are going to be focused on, expediency, learning quickly, and something that I use frequently. Okay. Now, the real reason why you're here, after all that being said this morning, is because of the fact of these trading competitions. I've been fortunate to win 23 of them. I'm done now for a while. I'm only going to do probably the international ones next year for the most part. That may change to some degree, but as far as money shows, Traders Expos, I'm kind of done from that whole scene. I want to focus really on our students at a whole different level going into next year. But these ones in black are all the domestic trading competitions, and the one in blue are the international trading competitions. So that's the real reason you're here. Now, the one here in the United States you saw like last week was kind of more like a one-on-one kind of competition, with these international ones can have as many as 16 traders representing their countries from around the world. So they're kind of a big deal, pretty intense, and this was actually my equity curve during one of those competitions, and this is really my equity curve, frankly, for the year. I've had a phenomenal equity curve, both in my private trading and my trading in the trading room. It's been a phenomenal year, and then actually this year in Italy was pretty much the same trading. When I started out, then made more money, and then made more money. So it's been a phenomenal year. It's absolutely phenomenal year, and it's great to have many of you that are here today watching this presentation along, as you've seen that journey unfold. So with that being said, this strategy now that we're going to talk about is actually in 2012. It was the first trade that I took to help me get through the trading competition in Paris, France. Americans had gone before me in the past in different trading competitions, and big names here in the United States, and they got blown out in the first round. When you go from 16 traders down to 8, usually the Americans were losing pretty quickly. So I was the first American that went over there, and that was back in 2012. I was invited to go there, and I did the trading competition, and one of the trades that helped me get through that first round from 16 traders down to 8 was the strategy I'm about to share with you now. And then in subsequent years, going back to Italy, it actually led to some fairly good profits during the trading competition. In fact, 1 year here between the stock indices, crude oil, and the DAX, so U.S. and German stock indices and the crude oil, went ahead and led to several $1,000s over 18 trades in 6 hours. So in many of those trades were the strategy I'm about to share with you now. And then during the trading competition last week, I traded both long and I traded short, and I used both variations of the strategy I'm about to show with you. So I hope that kind of builds it up and helps you understand that this is pretty important to me, and I want to emphasize that, since I'm giving you this information for free. Well, sometimes people think, well, it must not have value. Well, I can assure you it has a great deal of value to me. Why am I going in and sharing it with you then? Well, because the bet that I'm taking, the ethical bribe that I'm making, is if I give you the information, you go out and do something wonderful with it. If it suits your style, like Hubert was saying earlier, then the bet that I'm making is you'll grow with me going forward, and that's worked out very well. So I'm looking forward to sharing that with you. So as I get ready to get into the strategy, which we're going to do in the next slide, what the difference about this strategy, what makes me successful in this toolbox of trading strategies in general and how I use them, because everybody starts out with stochastics, RSIs, MACDs, moving averages. We all start out with this, and I'm no different. I remember the books. The problem is most of the books are wrong, and so what's happening is people are either using the wrong settings or they're using these strategies the wrong way. I look at most of my strategies, and those of you that are here today know that have been trained under me already so far. You know that basically I take a lot of the work that everybody else is using. I use it either slightly or completely the opposite of what everybody else is doing, which is perhaps why I'm having such a wild success having this, winning these trading competitions around the world and the phenomenal year I've had because I'm using things differently. And so I'm hoping to enlighten you to that today. So what I'm about to do is show you the right way to use just one of these must-know strategies. All right. So with that being said, let's get into this and let's talk about this here. The strategy I want to share with you first here is called the full spike. All right. So what is this full spike? It's a short-term, wide-range stochastic spike against the prevailing trend. See, most people talk about stochastic spikes and RSI trades and things like that in terms of a sideways market, okay? And then what's happening is when the market pulls down below, say the stochastic or the RSI pulls down below, comes from back from below the 20 level, pulls back above the 20 level, that's where they say go long. And when it's above the 80 and pulls back down below the 80, then you're supposed to go short. That's the prevailing theory, common trading that you get from a lot of people on that. Well, the thing is, I actually use it differently. I don't use it in a sideways market because what is sideways market trading basically? When you're shorting the tops and buying the bottoms, what is that actually called? What do we call that, gang? When you're basically trading back and forth like this. I'm trying to be careful not to give it away. What do we call that? Channel trading, right? Yeah, channel trading. Okay, so if this is channel trading, how for those of you that have tried channel trading, how well does that work out for most of you? Because what ends up happening for most of you is this. Basically, with channel trading, here's what happens. The average trader goes ahead and by the time they even recognize that there is a channel in place, then usually there's not much left in the profit area by the time it becomes obvious to everybody else, and then the market starts to widen out. Well, the problem is, as it starts widening out, now you start getting stopped out. Then the market comes back up, and you're like, oh, that stinks. I knew it was going to come back up. So next time, when it comes back down, you're like, hey, look, I'm not going to go ahead and get out of this trade because I remember the last time, as soon as I got out of it, it turned around and reversed. So next time, you widen out your stop, but then it comes down and hits your stop only to watch it revert back to the mean again. So now you're really freaking out because you made a little bit of money when you first identified it, but now you're starting to lose money, you're starting to lose more money. So what ends up happening is then the next time it comes down, you don't put your stop here. You don't put your stop here. You say, I'm not putting my stop in here. The last time I did that, it went ahead and came back. My last two times I did that, it came back my way, and I'm not doing that again. Well, guess what? That ends up being the one where it goes, and it goes, and it goes, and it goes. So basically, you make a little bit of money after identifying what everybody else is already seeing, the channel. You make a little bit of money, but then you end up losing tons of money as it breaks out and your stops get hit initially, and then you just pull your stop, and then that ends up being the one that gets away. Does that sound about right? It's exactly how it plays out. That's right. So with that being said, what we're doing now is I'm going to be using this in a trending market. Okay, I'm going to be using this in a trending market. So let's talk about these. Where is my entry? It's at I'm looking for in an uptrend, or in a downtrend, excuse me, a downtrend. I'm looking to start below the 20 level and go ahead and spike up above the 80 level, okay? And then I'm looking to go ahead and short. All right, so that's in a downtrend. In an uptrend, I'm looking to start above the 80 level and fall down below the 20 level and then look to take a long, okay? So where's my exit? All right, the exit is going to be a trailing profit stop, and those of you that got to watch the trading competition last week in Las Vegas got to see that, or a target to a key support resistance level. Either way, though, we're still trailing. Even if it's a key support resistance level, we're still trailing it into that key support resistance. I'm going to walk you through that process in a few minutes, and I changed up some charts here to put some numbers associated with it, so hopefully it'll make it a little bit easier for you today. Where's the stop loss? So the stop loss is either trade past the plan's preset stop loss number. So you may go ahead and say, look, I'm never going to risk more than X number of ticks, dollars, whatever the case may be. Okay, so it may be a tick number, it may be a dollar number, some sort of preset stop loss number, Or like what I'll look at is like key support resistance levels like the 20-period exponential moving average. Now this may vary though because sometimes we want to go ahead and actually take the trade beyond the 20-period exponential moving average, especially if you're using like the default settings for the stochastic here. So with that being said, you wouldn't want to obviously have a default parameter of, well, if it's beyond the 20 EMA, I take a stop loss because no sooner you get in, you're going to be stopped out. So at that point, then you got to revert back to, a predefined stop loss number. By the way, real quickly, how many of you actually have a written trading plan here? Yeah, and Mig, I agree with you. That's right, and that's why I like the trading competitions that I do, like the one that I did last week. For instance, same thing. That's why I like to do these live trading competitions where it's real live money. Exactly, not funny money. I agree with you, and that's what I do. Okay, so now those of you that said you do have trading plans, how many of you honestly follow them consistently? Okay. Hey, thank you so much for your honesty. Okay, so the best I'm usually getting here, I do after many losses and mostly. Pretty much everybody else is, for the most part, knows, I nopes, I don'ts, and so on and so forth. Okay, listen, I appreciate your honesty. So out of this full house of people, virtually no one. Okay, so the thing is, just understand if you don't have a written trading plan, you don't have a consistency. How can you develop a consistency? Every time you take a trade, it's basically shooting from the hip. Okay, you may have a general concept, but what's going to happen here is, especially like if you're doing like those sideways trades we talked about a little bit ago, you have no consistency with the stop management. You really get yourself in trouble because you don't really have a plan to follow. So when you come to me and say, "Hey, Rob, can you help me here? This is what I'm doing. What do you think?" And it's like, "Well, can I see your trading plan?" And that can go and be problematic for you because you won't even have a trading plan. It's like, well, I just kind of throw it in when I feel it. It makes it a lot more difficult to correct. So trying to build some structure. Hopefully this might give you something to work with today to start building you some structure on at least one strategy of mine. Okay, so keep that in mind. You want to know your entries. You want to know your exits, your scale outs, your stop out points in advance. We never get smarter once we get into the trade. Also remember this little tip here. Best trades start from above the 80 and fall below the 20 in an uptrend, and start below the 20 and rally up above the 80 in a downtrend. Also, watch and use in the direction of the 20-period exponential moving average. Now, gang, if your favorite moving average happens to be a 19.26195, simple, that's perfectly fine, right? So somewhere between 19 and 21 periods, simple or exponential moving average. My personal preference is 20 EMA. See what works for you and what you like. All right, so let's talk about these trades. This was a live trade that I did over in London. I like to go ahead and show this one just because it was kind of one of those interesting ones. Unlike my competitor who showed up next week, who was not just a competitor but was also a personal friend, so of course I expect him to show up. What happened is, like in London here, my competitor did not show up 2 years ago in London. So I'm like, well, gang, we're here, so let me just go ahead and do live trading with you. There's no competition. There's nothing for me to win, but let me do live trading. Well, this trade was the first thing I did. This black line right here is the 20-period exponential moving average. Now, what we're looking at, there's only two things you need to get right on this chart, gang. Two things. This 20-period exponential moving average, or equivalent, somewhere between 19 and 21 periods, and the stochastic. Okay, that's the only thing I want you to focus on. You don't have to focus on this channel, my fast trader, core trader, any of that kind of stuff. You don't have to focus on anything there, excluding the 20 EMA and the stochastic. So what I'm looking for with the stochastic I'm looking for it to start below the 20 level and spike up above the 80 level, okay? This is for what I call a full spike, all right? Now, so we want a downtrend in place. Basically, over the last 20 bars, I'd like to see the 20-period exponential moving average be in a downtrend. Then I'd like to start from below the 20 level and spike up above the 80 level, okay, to execute a short at the close of this bar. All right, so I want to get into that trade right before the close of the bar. In fact, I'll pull over this little clock here. You see I got this clock. So what I do with this clock is, depending on the time frame I'm looking to trade, if I'm looking to trade on a 2-minute chart, then basically at 8:31 and 58 seconds, I'm going to short that bar right before the close. Okay, and then I expect the algorithms will come in once it locks in on the 2-minute bar and start driving it down. If it's a 5-minute bar, then I'm looking at 8:34 and 55 seconds, 8:34, 58 seconds in that area to jump in short, expecting at 8:35 when the algorithm starts seeing the pattern, go ahead and drive it down. Okay, but effectively what this is, it's a short-term overbought condition in a downtrend, okay? And so then what's happening here is you have this big red down bar where a lot of retail traders get sucked into the trade. It spikes up against them to take them out, only to watch it go their way. And to that point, how many of you here today feel like that's you? How many of you honestly feel like it feels like no matter when, no sooner do you finally make the commitment to get into a trade, the market turns around, goes against you, stops you out of the trade, only to then go right back the way you knew it was going to go anyways. How many of you feel like that? Almost feels like the market's out to get you. Okay, a lot of you laugh out loud. You're talking about me, me's, yeps. Okay, so I appreciate your honesty. Thanks, gang. All right, so with that being said, I want you to pick up on a couple cues that we're talking about here. Number one, I normally don't want to short after a big red bar. I don't want to short after a big red bar. I don't want to go long after a big green bar. If the last several bars back behind here were small bars kind of building up anticipation, keeping you out though, right? Because there are small little bars, maybe they had a little red associated with them. You know, it's like, nope, I'm not going to take that trade. That trade's going to roll over. And I know as soon as I get into it, it's going to roll over. Then you get the big green bar and you start counting up all the money you could have made had you gotten in earlier. That's the one that gets a lot of us in, and then that's when it rolls over. Okay, so big green bars up, don't like to go long into them. Big green bar or big red bars down, don't like to go short. Usually we're due for those retracements that are at least big enough to stop us out before we get continuation. So this pattern takes advantage of that whole process. So effectively what I'm trying to do is convert you to being the hunters, not the hunted. And I guarantee you there are a lot of people that are using this type of methodology here, and there's a lot of people who just aren't going to do it. They're not doing it, and you know, they may never do it, and so they're going to always be the hunted. So I want you guys to start thinking about this in relation to your own trades. Like, yeah, that is me. I get in after those big red bars, I short, and then it goes against me, stops out, only watch it go back my way. Okay, here's another one. I was teaching a class over for TradeStation in Barcelona, Spain, and we just got done teaching this class. Now, can everybody see? There's my black line. There's that 20-period exponential moving average. Clearly, this market was in a downtrend here. And it started below the 20 level and spiked up above the 80 level. And actually, to be clear, it was almost starting at the 0 level and went up to about the 90 level. Now, in real terms, a little secret there, really what I'm looking for is a stretch back of about 60 ticks, plus or minus 60 ticks, depending on what side of the market we're on here, plus or minus 60. So in this case, when this went basically 90 ticks, that's a heck of a stretch in this downtrend. Okay, so with that being said, we're starting below the 20, spiking up to and through the 80 in a downtrend. So where we want to short ideally is going to be right up here near the close of this bar. All right. Now, those of you that are familiar with my inventory retracement bar strategy, there's actually a trade opportunity right back behind it. So and that's why I said you'll often see those two kind of back to back, either my inventory retracement bar strategy or the stochastic spike we found near each other. So what we're looking for here is to take the short then when that bar spikes back up above the close, and then we're looking to trail it down. Okay, we're going to talk about trailing and momentarily. In fact, let's do that right now. So I want you to do, as we talk about trailing today, a lot of people struggle with this, and so I try to put some numbers on the screen here, and so I'm hoping that this will make it a little bit more simple for people as we look at this today. I want you to think in terms of 50, 80, 90 price. 50, 80, 90 price. This seems to have worked the best for people so far. So I want to go ahead and, as far as understanding this concept. The bottom line is what the concept is that initially I'm trying to give something more of a chance to run, but as we get closer to the intended target, we're tightening things up. How many of you have been taught? There's some big three-letter schools out there that charge ridiculous amounts of money that teach you just throw in a stop, throw in a stop loss. So let's say you're going long, throw in a target, throw in a stop loss, and just let it ride. And the problem is, in my opinion, their entry strategies aren't very good in the first place. Some of these particular three-letter schools that come to mind that got schools all over the United States and charge a lot of money. And so what happens is it may go your way, but it won't hit your target, and then turns around and becomes a full stop loss. So how many of you have been in that situation? You either learned from those schools and then you tried this, or you just do that. You put a target out there into space. It seems like it gets towards your target, misses your target, only to turn around and go back the opposite way and blow up on you. Sound familiar? Okay. All right. Very good. Well, not good, but thanks for your honesty. Okay, so with that being said, I want you to think about this a little bit differently today. Try think of these words. And let me back up from it. My biggest loss in my trading career was a result of having a profit on the board and not going ahead and trailing the profits. So years ago, that's why my company name is Become a Better Trader. No matter how big you get in this business, no matter how much money, no matter how many millions and hundreds of millions, et cetera, of dollars under management, you're going to make mistakes, and then how you manage those mistakes will determine you as a trader. Will you rise above them and go ahead and do like what I did, become a 23-time domestic and international trading champion with real money around the world? Or will you go ahead and say, I can't take it, I can't take the heat, I'm getting out of the kitchen? Okay, how we handle adversity, it's just like no difference in any other parts of our lives. Adversity, how you handle that adversity is going to define us as traders. So, a lot of people know about, George Soros making $1 billion in a year. A lot of people don't know how he turned right around and lost $1 billion, right? So how we come out of those things, does that make George Soros any less of a billionaire? No. So how we come out of that is important. So with that being said, we're going to talk about this in a moment. Now, before we do, I do want to remind you, next week I'm going to be sharing this strategy live. I've got nothing to sell you here today. I want to invite you guys to this event next week live, becomeabettertrader.com/live, where you can perhaps get to watch me trade this strategy and others live next week. You can just sign up right here, click here to get access. Just put your first name and email address in there. It will send you the information to go ahead and join us next week. Okay, so just wanted to remind you about that. And the trading I do, like everything else, it's live, real money. So that'll be good for you guys to see. So join us there at becomeabettertrader.com/live. Now, getting back to this, we talked about the concept of 50, 80, 90 price. So here's what happens. So remember, because we're thinking ahead, we're identifying a trade in advance. We're identifying a trade in advance. So in this case, targets that I like to use personally are going to be things like daily, weekly, monthly pivot points, and those are classic floor trader pivots. Everybody and their brother is trying to take the classic pivot formula, put their name on it, and resell it. Okay, from my perspective, run as far away as you can from that. What I'm talking about is a classic pivot formula. It works phenomenal, and so daily, weekly, monthly pivots. Most of your platforms will have them, the classic formula pivots in them, so that'd be great. The other thing I like to use is big key moving averages that everybody likes to use, like 50-day, 100-day, 200-day moving averages. Okay, so basically using big areas that everybody's focusing on. Now, with that being said, so an entry is taken. In this case, for those of you who aren't familiar with this trading platform here, the yellow is where an entry is taken. The blue line here is where the current price is at, and then this red bar is a trailing stop here to sell the long side trade. All right, so the target is right up here, and the the entry was down here. So the targets on the screen basically equates to right up in this area over here. All right, so as we get about 50% of the way to the target, then basically what I want to be doing is trailing about 50% of the way, trailing by 50% of profit earned. So what's happening is, keep that in mind, this is where the entry was taken, this is where the target is, this is where the current price is. So with that being said, once we get about 50% of the way to the target, I want to start trailing by 50%. Now, if the market were to rally or fall back and hit me, that means I'm basically locking in 25% of the profit earned. And this is actually one of my students, Dr. Sadir, that took this concept. I taught it to him live, and then that very day he took the trade live, following through with my concept. So I want you guys to see it. It's a teachable event. I taught him, and he did it, flawlessly here. So the so what happens is it goes ahead and so now we're trailing by 50%. Okay, now watch what happens next. As we get 80% of the way to the target, 80% of the way to the target, now I want to start trailing by 80% of profit earned. Okay, so 50% of the way to the profit, trail by 50%, get 80% of the way, move it to 80% of the profit earned. Okay, now as we go ahead and then get up to the target, trail by 90% of profit earned. Why? What's more likely to statistically happen here, gang? Is it more likely just to keep going, or is it more likely to stop in this area and reverse? It's far more likely to stop and reverse, isn't it? Okay, so with that being said, we want to go ahead and keep that in mind. Now, let me tell you, every once in a while, what will happen is because retail traders, one of the earliest things that a lot of us as retail traders get involved with is a breakout trading, because it's so easy. Breakout trading is so easy to see. Hey, if it breaks through that line, I'm going to go long. Well, as we know, that ends up being a miserable failure for the vast majority, if not all traders. You buy the breakout, and then it turns right around, rolls back down. So 1 out of 10 times or so, maybe it will go ahead and push up one more time. In that case, you can just trail it 1 for 1. And this is based on the time frame you're looking to take the trade, whether it's a 2-minute chart, a 5-minute chart, whether this is a daily chart, a weekly chart. Okay, so the with that being said, then what happens is this: if it doesn't break through that resistance level where you can just trail 1 for 1, then what I'm looking to do is just move the stop right up to price, because the expectation is that it's just going to roll over and take us out of the trade. Okay, so let's review that. 50, 80, 90 price. Okay, let's go through that one more time. So we determine the target. Okay, and hopefully you guys are really good at determining targets in some way, shape, form. In other words, through your strategies, whether it's my friend Todd and so like an Elliott wave or a Fibonacci concept, or whether it's a daily, weekly, monthly, pivot point like I just shared with you, which are some of my favorites, or like a 50, 100-day, 200-day moving average that everybody's staring at. You're looking for big, obvious support resistance levels that a lot of traders are looking for. Okay, that's what you're looking to gravitate towards. And then in this way, if you're wrong and you misjudge the overall distance to the target, well, at least then early on you're starting to lock in something. So if you were wrong and the target wasn't actually up to here, it was only to here, well then guess what? Then at least when it starts rolling back over, you've locked in some sort of profit instead of turning a loss, right? Many of you just said that worked very badly for you, okay, because you went ahead and just put a fixed target out there into space, and the fix, and then a big loss in the backdrop and come up towards your target. You had no trailing stop in there, and then it rolled over to become a loss. So does the concept make sense to you? Basically, what we're trying to do is give something a chance to run, tighten it up as it gets closer to the resist or the target level. Okay, and if it doesn't keep running as far as we thought, then at least we're trying to lock in some sort of profit. Okay. All right, good. So with that being said, let's go ahead and move on then. So that's what we're looking to do. Okay. Now let's also take a look at some of these trades. So I put together just a couple of recent trades. I should have actually put some of the ones from some of the recent competitions in here, but that's all right. So here's like some examples, even my private mentorship students. So I had a private mentorship group with me, and we took this trade live right here. So what happened was the market was going down, and by the way, for those of you that like Ichimoku Cloud, my friend Hubert teaches, you can use the cloud in the backdrop as well with this. The 20-period exponential moving average, like I said, is one of the key components as well to this. But what happens is this. So we go ahead, we got the market coming down. So here it was, had the big whoosh down. Then it went down a little bit further to make sure they got everybody trapped. And as soon as they had everybody trapped, they spike it up real hard. All right, well, you can see here, we spiked from below the 20. In this case, we were actually right down near the 0 line. And it spikes up there up to around the 90, 95 area. So a nice, huge reversal, nice and fast too. One little note, I like these reversals to usually happen within 1 to 3 bars, 1 to 3 bars. If it starts taking 4 to 5 bars for the market to roll over or reverse there, you might actually be seeing an actual full-blown reversal in the market, okay? So, well, this is a trade that I took even with my private mentorship group where I went ahead and shorted here, and you can see the stochastic spike there. So the market came down, got everybody trapped in there, and then spikes back. So you see in a downtrend, I'm looking to short the short-term retracement. Okay. Now in an uptrend, we're looking for just the opposite. Okay. So this is a trade in the trading room. So we went ahead. We had a great cloud breakout strategy. My friend Hubert and I teach this strategy together in different events. And what ended up happening was we had a pullback. Now guess what? This is the half spike strategy. Now I won't have time to go through this one with you today, but perhaps next week at the live event I can go through this with you more. I take a lot of these. The market went ahead and half spiked back, started to take back off. And John took a live trading, one of my student instructors who comes in every once in a while to show people what it looks like as a student to be able to take these trades. Went in and took a trade there, and that was pretty awesome. It spiked up very quickly to the upside. So you start off with the uptrend, you go ahead and pull back here, get the half spike, and then you're looking for a takeoff. Usually earlier in the trend, you're going to see half spikes. Later in the trend, you'll start seeing full spikes. Okay. So it's some more examples here. And so here we got the market coming down. You see that 20-period exponential moving average. We started below the 20 line, spiked up to the 80 line, took that one short in the room. Now, this was right at the close of the session here for us in the live trading room. So we actually kept the live trading room open later to go ahead and follow through on this trade so people could see, because I always close out my positions before we close the room. So, and you can see what ultimately ended up happening with this market. It ended up coming down. Now let me ask you a question. What about this right here? And what about this right here? Were those good stochastic spike trades? What do you think? Yes or no, gang? You think those were good stochastic spikes? And the answer is absolutely. These were downtrends, full stochastic spikes coming from below the 20 level, up above. Absolutely, so you're right. The only reason they're not marked here is because those were not in the live trading room, and so I'm only focusing on things we actually did in the live trading room or did live in front of people, okay? And Bruce, good morning to you. By the way, Bruce, I don't know if you saw, I went in, I left you a voicemail the other day. You called the office later in the day, they helped you with your indicators and stuff, but I actually called you that morning. So, but the initial stop is going to either be back behind the 20-period exponential moving average, or what did we say? So like right here, That's why it's ideal to get a pullback that's really close back behind like the 20-period moving average, because then you can have a really tight stop potentially. But what happens if this distance, I'm just going to make a, this was only a $200 gap here, but I'm just going to say something extreme. What happens if this is like a $1,000 gap back to the 20-period exponential moving average? What are my options? Well, I can either go ahead and either trade less size, or have a predetermined stop loss number, or number three, not take the trade and just wait for the next trade. The next good trade opportunity, the next strategy is right around the corner. That's right, because your risk reward could be off, Jason, exactly. And so the next good trade is right around the corner. So why not go ahead and consider something like this, where you have a really tight risk and big reward, right? So let's just maybe pass on this one. Make sense? Okay. So let's go ahead and go through a couple more here real quick. So the market's going in and trending down. I went a little bit slower today. I'm trying to share this a little bit more deeper than I normally would. This is a completely free event. I've got nothing to sell you today. I offer you guys to join the live trading room, or the live trading event, not the trading room, but the live trading event that I'm doing next week for you guys. And sort of taking our time kind of going through this a little bit more in depth. So it's pushing down. So, typical, get those either big move downs and then slow bleeds where nobody can take it anymore, or you get the slow bleeds and then the big move down. Either way, the result's the same. What ends up happening, it traps the retail traders, spikes up against them. So we started at the 20 level, spikes up to and through the 80 level, and of course the closer we can be to the 20-period exponential moving average, the better, because it's great when you can keep your stop loss really tight on those, and then look for a move back down. Okay, so that was one that we did in the live trading room as well. Here's another one that we did in the live trading room. So hopefully you'll see me do these at the event that I invited you to next week, where the market is pulling back here, and you see we start from above the 80, pull down below the 20 level here, and I took that trade. Now, let me ask you a question. What about this one over here? Is this a good stochastic spike as well? What do you think, gang? Hey, Edward, good to see you as always. And you're absolutely correct. Yes, it is. Okay, so wait a minute. This is before 11 a.m. when the room closes, officially. So why did we take that one? Well, here's what happened that day. So we did go ahead and take this one. All right, and it's great. It's nice. You can see ultimately this market went up real nice afterwards. But take a look what happened here. As we got up to about 10:45, so about 15 minutes before we closed the room, we started watching paint dry here. And so we were getting really close to the actual official close of the morning room. And so what we just did, we ended a few minutes early that day. And then as Murphy's Law would have it, right before we, or right after we ended the room, then it went ahead and it came down and then popped back up again. So we didn't do that trade in the live trading room. But it is a good setup here. So we did this one in the trading room. We didn't do this one because we were sitting there and we're getting right into the last few minutes before the close. And so it's like, okay, looks like we're in nice. I try to complete the trades before we close, and so if I get a trade right at 11 o'clock, I'll stay as late as I could. That day I couldn't stay. So the market was just sitting there kind of drifting sideways, so we didn't take that particular one, okay? So I missed that one, but it is a perfectly good trade entry, okay? Here's that one again. You can see it like with Ichimoku Cloud. So you can use some basic tools like Ichimoku Cloud. You can use that 20-period exponential moving average. That's really all you need. The 20-period exponential moving average for this particular strategy, along with the stochastic, is really all you need for this one, gang, okay? And that's what's really nice about this. And so I just wanted you to see in this particular strategy, you can see you could just have a price chart, a 20-period, and the stochastic. If you like having things like Ichimoku Cloud to get a feel for where that's at for key support resistance levels, and if it's coming out of the cloud before it pulls back, that's great. If it can come out of the cloud before it pulls back, wonderful. So you can see how all that goes ahead and really ties together, which is why Hubert and I got some great programs that we've put together talking about how these things kind of intercorrelate. Really, really phenomenal stuff. And in a few moments, my friend Todd is going to come up and he's going to talk about some different things like the Elliott wave, perhaps Fibonacci and that, and he can talk about how some of these things can tie in as well. And if you guys can't, stay for his presentation. If you can't do anything else, and you got to come to watch all the other events later on recording and stuff, make sure you watch Todd's event there too, because he's a great resource, a great guy, and I can't say enough good things about him either. So if you can only stay for one more event, his is the event I want you guys to see there, and he can tie some more wonderful things together here. So the real reason you guys are here today, gang, is because these this is just one strategy I've used in part or in whole to win all these trading competitions around the world. Okay, these are all, I do these in my live trading room. Those of you guys who are in my trading room, we recently changed up the format of the room and to focus a lot more on trades versus talking, but even still, we teach and trade that strategy in the live trading room, and you see a lot of the trades I take when I'm doing 2, 4, 6 trades in a morning. Several of them will be the strategy or one of the variations, like a half spike and so on and so forth. So and also like this event here in Paris, out of the 18 trades, many of those trades that morning were this strategy because the market was just tanking. It was just tanking. Every time it was pulling back, I'm looking for fresh shorts. It was just a phenomenal session there. And so just a reminder too, a final reminder, as I maybe look to see if I can answer a question or two real quick before we go and move on. I have nothing to sell you today. This is strictly for me trying to give back to you guys as my student family, be here with my friends Hubert and Todd and Jeanette, and do something wonderful with them for the special event. But join me next week at this live trading event that I'm going to be doing. It's becomeabettertrader.com/live, so you can perhaps see me do this live with real money, okay? And I'm looking forward to being there with you guys. So the let's see, where's the buy indicators to buy or sell? So actually, the Jerry, what you're looking for there, what's happening is you're buying at the close of this bar. So you may not have been here, Jerry, earlier when I was talking about the how I do this with if it's a 2-minute bar, let's say, I'm going to be at 8:57 and 55, 58 seconds. If it's a 5-minute bar, then I'm going to be at 8:59 and 55, 8:59, 58 seconds there. Usually in those last couple seconds before the close of the bar, that's where I'm looking to go ahead and enter the buy or enter the sell, as it may be. Okay, so on that bar that's making that stochastic spike there, after a whoosh up, I want to see all those retail traders get stopped out. So it whooshes up there. I'm looking for that to close near the high there, a couple seconds before the close there. Okay. So and as we go ahead and take a look there, so that's awesome. Well, so there's more questions on the stochastic and stuff like that. I see we're at 8:57, 40 seconds. What we'll do, just come to the event next week. We'll talk more about the stochastic, and I'll keep us on time here this morning. But I want to go ahead and thank you guys because this is phenomenal. It's great stuff, and so go to becomeabettertrader.com/live. I'll see you at that event next week for live trading. And like I said, I'm probably one of the only people that you will come across in the business community today, not trading, but just business in general, is not going to try to sell you something. Today I'm just giving you value, and this is a strategy I love to use, and I want to go ahead and thank you guys for being really attentive listeners and actively participating with me. So now I think Hubert's going to take over from here, but I also want to encourage you to stay with my friend Todd. He's got a lot of great stuff to share with you as well, and happy Thanksgiving, happy safe holiday weekend, and looking forward to being with you at this special event next week, gang. So with that being said, Hubert, I'll turn it over to you to kind of keep us on schedule here.